What's going on, everyone? It is January 6th, 2021. Today was a crazy day, so let's just get it going right away. Before we get going, we just also got to let you know this is not investment advice. We are not investment advisors. We hold no registrations or licenses. What'd you think about today?
Yeah, what's up, everybody? Today was a wild day, not just in the news and in the capital, but in the markets, of course. Down in the morning, up in the early morning, and then just sideways. But let's see what you think.
Yeah, it was a really interesting day. We had overnight with the news that was coming out from Georgia. Tech was selling off pretty hard, and that kind of persisted early in the morning. We saw tech quite red, but interestingly, we saw a big recovery in the ES, and the Russell just went bananas today, just straight vertical. So the idea here seems to be that the market was liking this from a small cap and S&P 500 perspective, but the NASDAQ was not happy. So if we look at it a little bit more closely to see what it was that was happening, we've had this range that we've been in here for about a week, and it looked like then we were actually starting to break below that range. Didn't really happen. We bounced off the 20, went sideways just for a day, and then we had a huge reversal today that looked like we were about to take out all of last week and then potentially continue farther beyond all-time new highs. Then what happened was we had the news that was coming out in the afternoon from the Capitol, and things reversed, and we've closed right back square into range again. Now, the Russell just went crazy today, Ronnie. It just gapped up, and it just kept going, went up to an all-time high, finished the day up 4%, but it was up even higher throughout the day. NASDAQ, that was definitely the laggard of the day. It finished down 1.4%. And that's really what I want to focus on, because this all just looks pretty interesting to me, to have the S&P 500 as well as the Russell 2000 bringing us into all-time highs, but we're not getting any sort of joining in from the NASDAQ. What do you think about that?
Yeah, definitely interesting day with the indexes. Energy, can you pull up the energy index itself? How did that do today? Because I saw quite a few individual tickers that were just zooming.
Yeah, the market was overall held up by a couple of sectors. Energy was one of them, but really more than anything else, it was financials that was keeping everything afloat. If you guys remember a couple of days ago, we were talking about if we're going to take out our prior all-time highs and go into the next leg, it looked like the financials were going to be what was going to carry us ahead. And JP Morgan and Goldman Sachs today, they just went straight vertical. And if you were in it, that would have been an amazing move. It does look like it's pretty extended, and these financials are going to start to come into earnings season next week. So I don't really see anything to be chasing after at the moment. I would really want to wait until after earnings. Now, let's take a look down through the list and go through some of the classic FANG names. So Facebook, really weak today, down 760 or 2.8%. Just chart-wise, this looks really negative, and a lot of these FANG stocks to me look really negative. So this one is still well below its 20 and 50-day moving averages, and to me it looks more likely that it wants to go lower than anything else. Apple was really interesting. It had a bit of strength early on. It looked like it was going to go green and potentially recover. But then at the end of the day, with all of the negative news, Apple sold off quite a bit too. I think this is a watch because Apple may be one that's coming into play. They likely had a good quarter. So I would keep an eye on 130. If Apple can start to get above 130, then I think targeting as a first point the prior all-time highs, and then well beyond that. Netflix, you guys know how I feel about Netflix. Netflix is still in that range. It tried to move a little bit higher last week, and it's just taken all of that move back. It's closing right now at its 50. doesn't look like that's a positive play to me either. Now let's look at Amazon a little bit more closely. To me, Amazon, I feel, is really negative, and I actually am looking at Amazon as potentially something that may roll over and as a consequence bring the market down with it. What do you think about that, Ronnie?
Yeah, I think that Apple was interesting just because it really did seem like it was making a breakout and then it just collapsed under itself. But to me, I think overall, we're still going to get higher highs coming up with this earnings season. How do you think about that?
Yeah, I think that's a possibility later on, but right now, to me, there just seems as if there's quite a bit of uncertainty out there. And these FANG stocks, these things, they should be carrying the market as well with it. If we're getting all-time highs and we're not getting half of the entire index participating, and it's actually selling off and selling off considerably, to me, one of two things is going to happen. Either the market's going to roll over with all of FANG, or FANG is going to recover, and then it's going to start to go positive along with the rest of the market. To me, I always look to these as leaders. What do you think?
Yeah, so I think it's just interesting looking back through this past year and how FANG really held up the market in so many days where everything else was down, and those were the only ones, FANG and Tesla, because you might as well include Tesla now at this point. They were holding everything up in the market. Everything else was down, small cap, mid cap. And now those are the ones that are starting to seem to hold up the market. They say that this is better overall because this is more representative of everything that's happening. But I don't know. We'll see.
Yeah, no, I think that having rotation is certainly healthy, but at the moment we are making all-time highs and really interesting all-time highs on the S&P and the Russell, which are just going almost vertical right now, but we're not getting any participation from the NASDAQ. And not only that, the NASDAQ has now, for the first time since back in November, had a close below its 20-day simple moving average. The last time that it did that, it had a pretty decent pullback. So I think that just having a little bit of profit taking from people from all of last year, there was a lot that was made in the NASDAQ, up almost 40% for the year. It needs to pull back just to be healthy. And really what I would say the biggest thing that I would be looking at would be Amazon. And I would be targeting down to 2,900. That's going to be its 200-day average. And then that looks to me as a point that you could play with put butterflies, targeting that. And then once it gets there, then looking at a reversal and a bounce to go back long. So what I would say is one possibility could be doing about 2 weeks out, 2,900, 2,600, 2,300, put butterfly. And with that, if you see that it does roll over and get to 2,900, I bet that butterfly is going to expand quite widely. You're going to make a decent bid off of that. You could lock it in and then be looking at the potential bounce there. Now, Tesla, you mentioned Tesla. It started off the day really strong, got up to a high of 774, and then in the midst of all the chaos, it pulled back just slightly, still finished up 20. This has just still been going up vertical. What do you think?
Yeah, there's just no stopping Tesla at this moment. Tesla, I feel like, just has incredible strength. It just can't be stopped. So I'd be wary about shorting this at any point. And if you do, it's got to be on the short term. Do you have any setups or plays actually for Tesla that you could see or tell?
No, I'm not seeing anything here with Tesla. If you started to see in any way any sort of reversal, you could look at getting back to 700 as a possibility. But I would say first target would actually be something around 740, and that would be a gap fill from the recent gap. I agree, though. I wouldn't want to try to get short this. I would just stay away and really just short term if people are out there and they want to scalp this with buying whatever the momentum is, either up or down. That's a possibility. The chip stocks, I've been negative on the chip stocks lately. NVIDIA did have a few days where ARK or ARK came out with their nightly release saying that they were buying shares. and that did give some support to NVIDIA. It did have a bit of a move for the first couple of days of this week, but it had a nasty reversal today, closed again below the 20 and the 50. Just to me, just looks very negative. I wouldn't be messing with NVIDIA at the moment. Google also is just hovering right around the top of the gap. To me, Google is below the 50 as well. This looks very concerning that at some point, if it's going to roll over, I would be looking at 1650. So I think that 1650 should be a decent target for Google if we're going to see some true weakness in the market. So what do you think about some of your stocks?
Yeah, so one of the top of my list is Skills. That, of course, got bought up by ARK.
So that's
That
SKLZ, Skills.
Correct. Yep, Skills. Their app itself is not that great. Never used it, but it's more about the tech of it that they could use in other gaming programs. But it looks like you had a pretty good play with that. Do you want to break that down for a moment?
Yeah, Skills looks like it had a really nice bounce off of its 20. So getting long, that was a decent play. And if you look at the 50, it's out at 1585. So if you check out the market, you could be looking out into February. At the time, you could have been selling some 15 puts for February, but that right now has lost a lot of its premium. So right now, I would say it's probably too late to be looking at getting into Skills. It peaked over its prior all-time high, and then it's pulled right back into range. So right now, I think that it may be a bit too overextended. So I would just be sitting tight on this and waiting to see if you can get a pullback into the $19.80 to $20 level. And that area, then I think it would be a nice place to be making another move with getting long either shares or in the money options, and then also looking to sell some puts for the following month. What do you think about Corsair? CRSR.
Yeah, so Corsair, I definitely think long term this is going to be very solid. You and I were talking about some leap plays on this, looking at the December options chain. Was there anything particular that you saw in that one that you were thinking of?
Yeah, Corsair has been in a range. Yeah, Corsair's been in a range here for a few months, going back into November. And if you take a look, it looks to have a floor right around 30 to 32. So selling monthly 30 puts seems as if it would be decent. And even if you got assigned at that 30 put, I think that would be a good area actually to be long some stock if you were assigned at that level. And long term, we know that gaming peripherals, Corsair, it's a great company. They make great products. Everyone's buying all of these things. It just had a prior all-time high of 51.37. It looks like that could be revisited at the end of the year. And if we get there, I think there would be a short-term pullback, but ultimately we may very well just go higher. If we look at the length of the range, it was from 50 to 30. So that's about $20 is the range that it's been in here for the past few months. So if we break above 50, I would double that range and be looking towards 70 as being a longer term target. So finding a way that you could structure out collecting premium on monthly 30 puts and then actually adding slowly with size, because right now everything still is very tentative. Some in the money call verticals going out to December. So 20 or 25 over 70 call vertical, just looking to see if you can get that premium such that there's minimal extrinsic value. So what I would mean by that is, let's say if you want to go out to December, and let's pull up the chain and look at it. The 20 call is right now priced at 21.05. And right now, the stock itself is trading at 37.89. So that means that there's about $4 of extrinsic value in that option, or the time component. So if you look along the chain to see where you could get that $4 to get rid of that extrinsic value, you could buy a 20 call for 21 You could sell a 70 call for 560, and that would make your net debit about $15. And then 15 plus the 20 strike that you purchased, that gets you at 35. So you're really making a play that's essentially trying to make a move one-to-one with Corsair itself. And I think that's a better play because you're not really sitting there with a lot of that time premium that's likely going to decay if it just chops around. What do you think about that?
Yeah, I think anytime you can get rid of the time premium, it's going to be a good play. I think we should follow up on that over time just to see how that turns out. What do you think?
Yeah, we'll keep an eye on that. We'll keep you guys updated, but that's definitely going to be something to be looking at is monthly Corsair 30 puts, being okay with being assigned shares because it looks to be a long term. But what do you think going forward here for the rest of the weekend?
I think we'll start seeing strength in the thing. I think this is just a short term with everything happening in the news and the Capitol, Georgia, and whatnot. I think this is just a blip in the radar. It's not actually going to change anything going forward. Strength in tech, strength in NASDAQ will be present. COVID's here to stay. There's mutations happening. I don't know who or when people are going back to work, but it doesn't seem like soon. Also, we didn't really touch on the energy. Was there anything in energy that you saw going forward? It seems like with the Democrats and whatnot controlling the Senate and presidency, everyone's talking about how solar and electric, that's going to be the big thing this year. And also with marijuana, CBD and whatnot, those are big. One ticker I want to throw out there, if you can pull it up, is Grow Generation, GRWG. You could just pull that up, take a look. This is a big one on FinTwit.
What is it, GR?
GRWG, Grow Generation. This had a low of, I think, 1190, and that was after it had IPO'd. And there was some governance issues within the company, but it seems like that's cleared up, and it's just been on a tear nonstop since then.
Yeah, it's got a nice looking chart, looks healthy. I think that above 43, as long as it stays above 43, it's solid for a long. I agree. As far as other energy, I'm just not a big fan of the energy names. Clearly, petroleum, we need it. It's necessary, and it's nice to see that crude oil has had a recovery and the energy names are getting a bid. That's definitely healthy. Looking at some of the high flyers, we talked about Tesla, but also NIO. NIO, I believe, is going to be having an important day this week. So I would just be cautious with that because there's always volatility with any announcements. But NIO looks pretty healthy. If we break out of this range from NIO, we could be ready for the next leg higher. And what could that potentially be? I think that could be possibly going to 90 to 100 and the next leg higher. So if we see a break above 57, then we should be looking at longer term, possibly getting a 90 with NIO.
So with that being said, you think we should put up an alert now on 57 and go long at that point?
Yeah, I think we should be looking at it, and if we see NIO clearing that, and it's likely not going to be clean. You're not going to get a perfect entry. These things, they may just open up right above 57 and it'll open at 60 and you never even got a chance. But definitely setting an alert there and just keeping an eye on seeing what's going on, I think is worthwhile. The last thing I would touch on though is metals. So gold had a nice run here in the past week. It did pull back quite a bit here today, but if you take a look at the chart, really this was just a gap fill based off of the recent gap that it's had. It bounced right off of that. So I think that staying in gold still is a play. Definitely as long as it stays above 178. To me, it looks like it's a long. So I would just leave that for you guys as a final thought. Metals, gold above 178. You got anything else before we let them go, Ronnie?
Yeah, I actually just got a tweet that just popped up right now. Plug Power, PLUG. This used to be a penny stock. few years back, and it just got a $1.5 billion investment, and it just popped after hours, up $7,
Yeah, that's
up 20%.
pretty impressive. Right now it's at 41. It's cleared its prior highs of 37. So this is just how these things happen. They end up gapping up over. You can set alerts at prior highs and hope to get in, but a lot of times they just have a pro gap where they just go above it. But that looks clean. I think that looks like it's long because that's just a short-term pullback, very technical, right to the 20. I agree. PLUG, staying long, that seems reasonable above 37.50.
I would say watch for gap up even more in the morning, maybe for a short, quick trade in and out in the
All
first
right.
30 minutes.
All right, cool. All right. You guys take it easy. We'll get you guys on the next one.
But